All right. Welcome, guys. Whoa! 4 likes? Yo, we didn't even start. Seems like that's a increasing pattern to like the live streams before it even begins. But hey, thank you guys. But yeah, welcome. Oh, 5 likes now. Wow. Welcome, guys, to this week's Tuesday live stream for this week. All right, so I made you guys wait long enough. It's been like 2 minutes. So let's get right into the topic of this live stream. So first of all, we have 2 major events going on tomorrow. Okay, we have the CPI report for May and the FOMC rate decision and the Jerome Powell news conference. And I know you probably might have heard me say things about the upcoming FOMC meeting and the CPI, but I just want to kind of go over a little bit more detail of what to expect tomorrow. Right now, obviously, it's kind of a 50-50 tomorrow. I mean, well, it really is actually. It's a 50-50 event. I'm not going to be always right. I'm not always going to be wrong. It's always a 50-50, right? Hey, what's up, Hugo? What's up, Joel? What's up? Wow, there's a lot of people here tonight. What's up? 7 likes now. Holy crap. We can get to 10 likes before I even really go into the live stream. But hey, thank you guys. Thank you so much. So, tomorrow, let's first go over CPI. For CPI inflation, I'm still going to expect inflation to go down. Now, if you guys remember from my last week's Hump Day Market Recap video, so it's my new series, if you guys didn't know, every single Wednesday I put out a new video kind of going into detail of what you guys should be expecting for the rest of that specific trading week. And if you guys haven't watched it, make sure you guys go watch it. All right, it's the Hump Day Market Recap video, so make sure you guys go watch it from last Wednesday. I basically said that when inflation is heading towards a high or a low, we tend to see oscillations in the actual data. And what that means is that we tend to see, small jumps up and down, right? Literally just, well, that's exactly what oscillations mean, right? The term oscillations means exactly that. So whenever we're at a top or a bottom for any type of trend, we tend to see such oscillations. Now, what's interesting about... Oh, give me 1 second, guys. Okay. Sorry, guys. I had to adjust the mic here. So what's interesting about these specific oscillations for the inflation data and what the patterns that we've been seeing is that as we're heading towards that quote-unquote 2% target. Now, just a side note, the market seems to be a little bit more comfortable with the 2% target. However, from a majority standpoint or perspective, we're still a little bit doubtful, and hence the reason why whenever the Federal Reserve says that they're keeping their 2% target, everyone is still a bit, wishy-washy on what they truly mean about a 2% target, and if it can even reach a 2% target. So, with the recent, if you guys didn't know, with the recent jumps in inflation, they're very, very tiny. Okay, they're very tiny. It seems like we are, again, still in that stage of oscillations where we're going to be seeing month over month jumps and month over month moves back down in the actual inflation data. And again, that's an overall general outlook of a bottoming, quote unquote bottoming signal, if you can say, if it's a signal for inflation. And if the Federal Reserve themselves have told us that they're comfortable with where they're at with inflation, obviously they're not at their 2% target yet. We should be gaining a little bit more optimism and more confidence in what the Federal Reserve is doing. So with such oscillations, I'm expecting tomorrow to most likely be in line with expectations, and the current expectation for tomorrow for the headline CPI is 3.9%. And let me make sure that is correct, because I do read a lot of data. So yeah, so CPI for tomorrow will be, actually I got that wrong. 3.4%. Okay, so it's the same. So the headline CPI tomorrow for the year over year is going to be 3.4%, which was the previous actual CPI year over year as well for the previous month of April. So, you know, actually, hold on a second. I don't think this is the updated one. Let's see. Okay, well, my MarketWatch website is not loading in for some reason. I have the different... What's going on here? It's not right. Oh no. Okay, well, that is correct actually. All right, I thought my my browser was bugging here, or the website, but everything's fine. Okay, so the previous inflation report saw what do you call it? The core and headline inflation, you know, at 3.4%, with core CPI around what is it here? No, I don't see it here for some reason. There we go. Oh, 0.3%. It's not loading. I don't know why it's not loading here. I don't know if it's my my Wi-Fi or my website here from MarketWatch, but okay. So core CPI was 0.3%, and CPI year over year, the headline CPI was 3.4%. And so tomorrow, what economists and analysts are expecting are the same values from April. Okay, so for May, for the month of May, they're expecting 3.4% again and 0.3% again for both the headline CPI and core CPI respectively. And so, oh, 10 likes. Thank you guys. So basically, I'm not going to be expecting the markets to really react if we come in line with expectations. And even if we do see a small bump in the actual data compared to the expectation of 3.4% on the headline CPI, so maybe around 3.5 or 3.6, who knows? I really don't think we're going to be seeing any type of a large market reaction. So then now you guys might be asking, well, what kind of reaction will we have tomorrow? Well, all of that is going to rely on what the Federal Reserve says, right? So yes, we have the rate decision coming out tomorrow, which is obviously going to be a hold, right? The rates are going to be left unchanged, okay? I've been telling you guys this for quite some time now. We're seeing a multi-month pausing period that will go on for another few FOMC meetings, and tomorrow it's going to be the same, right? It's most likely going to be the same, and the only thing that will truly move the markets is what the Federal Reserve says, especially what Jerome Powell will say in the news conference tomorrow. Okay, so to kind of summarize everything, what I'm trying to say here is that the data that we get tomorrow and the actual rate decision that we get tomorrow from the Federal Reserve will not really move the markets. Maybe the inflation report might move the markets pre-market, just a little up and down movement, but you know, I really truly don't think we're going to see any type of large movement. Now, based on what I just said to you guys, it's very interesting to see yesterday and today all of the rate sensitive sectors and specific groups acting really well into CPI tomorrow. Okay, so from Monday to today's price action, it was quite interesting to see how well they were acting. First of all, okay, let's take a look at IWM. Okay, so small caps. And if you guys have been keeping up with my YouTube videos and even just my Instagram stories, you guys should know why small caps are so sensitive to rates, right? The overall interest rates, or the benchmark rate, interest rate for the overall, I guess, from the Federal Reserve. So the Russell 2000, or IWM, has been acting really well. Every single time that we've seen a retest of the psychological $200 support level, we've seen immediate buying. All right, this is a huge magnet level. Okay, now you guys can go a little bit more deeper into why this is a great level, or great level to be watching out for. But again, I like to keep things very simple. This is just a simple psychological $200 level. All right, it's a magnet level. It's where buyers have to hold it's kind of a line in the sand, a short-term line in the sand level where we need to hold. And every single time that we dip below it or we retest it, we see immediate buying. And so it was interesting to see that yesterday we had a massive gap down. It was over 1%, I believe, a negative 1% at open. But we continued to see this kind of attractive or not really just an attractive, but kind of a magnetic reaction to the fact that the price was below this psychological $200 level, and we started to push up higher, and ultimately we ended up closing over this $200 level. And that's really interesting to me because, again, if we are to see some very bad news heading into CPI tomorrow, I would not have expected a rally today. Right, especially even just in the overall markets, right? The S&P 500 ended up with a very nice new all-time high print of $537.01. Okay, and obviously this is mostly due to Apple's huge move today. I believe there was a bunch of upgrades today, especially after that kind of fake out or shake out that we saw yesterday when we saw a nice selling from that major resistance level around 192, if I remember correctly. I think it's 192. No, it was 190, 197. 192 was the support. Okay, so SPY definitely had a nice all-time high print thanks to Apple. But overall, the markets have been acting really well heading into tomorrow's May's inflation report and into the Federal Reserve FOMC rate decision. So everything rests on the shoulder of Jerome Powell and what he says. Now, the other kind of specific sector that I've been looking at is XLP, consumer staples. So consumer staples have been acting really well. And in fact, on this monthly time frame, we have this huge base, XLP. Okay, this is the ticker symbol for consumer staples, right? Oh, that's not what I wanted to do. Okay, so what I have here is a major resistance level at 78.50, okay, and a support level at 68. These are monthly levels, and this is quite the large macro base on a huge higher time frame chart, and this obviously tells me that there is a lot of strength going into consumer staples and heading into the May's CPI report and the actual FOMC rate decision. So this lets me know that, hey, something is kind of brewing here, right? And not just the overall consumer staples sector. We're seeing a lot of good movement in solar names, right? FSLR. This was a huge swing trade idea and win from the month of May here. Okay, so if I go back to the daily time frame, all right, so the original swing trade idea was an entry point over 199 and it blasted off, right? And today we had a nice blast off today and it looks like the price wants to hit 300 as well. So, FSLR, ENPH, so these two are the leading solar stock names. They were, both of them, yesterday and today, seeing some incredible price action to the upside, back to the upside. And this is all within the fact that tomorrow we have the rate decision and inflation numbers. Very, very important inflation numbers. So again, all of this is hinting at a potential really tame reaction to May's inflation report. Again, even if it comes out to be 3.5% as the actual May inflation number compared to the 3.4% expectation number. Again, I really don't think we're going to be seeing any type of a large reaction. And so all of the actual movement from the overall markets will rest on the shoulders of what Jerome Powell says tomorrow, right? What comes out of his mouth, essentially. And so that is a great segue into what I truly think Jerome Powell should say tomorrow and kind of what I predict of what he was saying. So as we all know, okay, by now, as you guys should know by now, the labor market has been showing some very good signs of finally cracking. And since 2022, if you guys remember, I've been telling you guys that the Federal Reserve is attacking inflation. Well, you guys should know, everyone should know this. They've been attacking inflation and the tight labor market, right? And also they're trying to attack those two specific factors and not crashing the economy, right? They're trying to create that quote unquote soft landing. They've been saying that for years. So it seems like they've been able to constructively, potentially, I'm choosing my words carefully here, just like the Fed, to provide us with a soft landing for the economy. All right, so far, that seems to be the case. Because again, from the previous FOMC meeting and what Jerome Powell said, they are well positioned, right? They are well positioned. That's exactly what he said, essentially. That's a very quick summary of what he said, right? The Federal Reserve is well positioned to act quickly on whatever data that they're tracking, right? So again, they track the PCE report for inflation, right? Really well, and also they just track the NFP data, right? The monthly jobs report. So it seems like so far they were able to construct a potential soft landing once they're able to bring back inflation to that 2% target, and once they're able to ultimately quote unquote crack the labor market, the very tight labor market, or not even just crack, but just to loosen up, right, the labor market. And so far it seems to be working out. So last month, we've actually had a pretty strong addition of jobs, so job growth last month. However, we also saw the unemployment rate going back up to 4%, because we've been at historically basically zero unemployment. So basically no unemployment at all, right? And that number tends to be around 3.5% to 4% in a healthy economy. Hopefully you guys remember that from your economy classes back in high school. As we're starting to see the UR value, or the unemployment rate, starting to creep up back to 4%, it tells us that the labor market is loosening up. And so I believe we're coming to a median point where the Federal Reserve has to act quickly, but in a very smart way, where they're able to, again, create that soft landing while making sure that their target of the 2% inflation target, right, or the value, is reached, right? And they're able to loosen up the labor market while not creating an economic recession, right? So again, they're in a very sensitive median point, but again, they themselves have told all of us, the public, that they're well positioned. So we're going to take that at a face value. So tomorrow, I really hope we can see or hear Jerome Powell saying that there is at least one rate cut in the horizon, right? So as I've been saying since last year, we should be expecting our first official rate cut either right before quarter 3 or during quarter 3. And I told you guys that I'm most likely betting on a rate cut during quarter 3. All right, that was kind of my general prediction on what the Federal Reserve is looking to do. And so far, based on the expectations of the market, it seems like we're looking for a rate cut in September's FOMC meeting. If not, then it has to be pushed back to November. But again, what critical event that we have on November in the US? The presidential elections. So, I really don't think they really want to be cutting rates at a critical time like that. And so I'm most likely going to keep my initial prediction that we will be seeing the official rate cut in September, before the turn of quarter 4. So during quarter 3, essentially. And, tomorrow, Jerome Powell, I really think that we need to be hearing him say, at least indirectly hinting at a rate cut, at least minimum of one rate cut for this fiscal year of 2024. So tomorrow, I really hope to hear Jerome Powell saying something along the lines of, hey, the recent data for inflation and the labor market hasn't been too favorable, but from a general trend and general perspective, and if you kind of look further out from what we've of how far we've come from the summer of 2022, for example, June of 2022, when we saw the highest inflation data and value since the late 1980s or whatever the date was, right? We're always going back and comparing the inflation numbers back to like 1970s to like 1990s. That's not really important right now, but my point being is that the Federal Reserve is really trying to take this from a general perspective and a bigger picture outlook. And based on that bigger picture outlook, I want Jerome Powell, or at least I want him to say something of in the lines of, hey, this bigger picture outlook seems great, right? We're still in a nice overall trend where we're able to shift the overall rates towards a favorable, I guess, quote unquote, outcome where we can still see inflation dropping towards our 2% target and the labor market seeing major cracks while not creating an economic recession, right? So again, I just want to see an indirect or direct hint that there will be a rate cut in the next few FOMC meetings. And I truly hope that we do get that September rate cut right before the November elections. Okay, so I'm still going to keep my quote-unquote prediction or theory on that specific or the specifics of the rate decision, the upcoming rate decisions. Okay, so and one last thing, guys. One last thing. Okay, so the bond markets, interesting enough, have reacted very positively today, and it closed at high. So the 20+ year Treasury bond ETF (TLT) ended up with a nice 1+% on the day. I mean, this is a really good move for a pretty important event tomorrow, inflation and the rate decision. So based on how the bond prices have moved in such a bullish way, we can correctly assume that the bond yields, specifically the 10-year yield that we look at, have reacted negatively. And so far, we've been making a very nice downtrend, okay? Lower highs and lower lows. And that's exactly what we want to be seeing, right? So this is a very, very nice downtrend, right? A typical textbook downtrend. And we also have another I would say it's a pretty sharp descending trend line here. Okay. Make it a little bit more accurate. Make this red. Okay. So to me, this looks pretty favorable to what the markets are expecting tomorrow from just the inflation report alone. But if I'm being a bit hopeful and a bit more optimistic, it also kind of guides us into what we can presume what the FOMC results will say, and also what Jerome Powell will exactly say as well. So again, just to kind of summarize everything, everything relies on what Jerome Powell says tomorrow. All right, and for me personally, what I am going to expect to hear from Jerome Powell is that we will get one rate cut, or at the minimum, there is a rate cut on the table that most, if not all, Federal Reserve members are discussing. All right, and everyone can be talking about the dot plot this, dot plot that, but I don't really care about that, right? All I want to hear from Jerome Powell tomorrow is that they are considering that there will be one rate cut in the future before this fiscal year ends. That's all I want to hear, and that's all you guys need to be looking out for tomorrow as well. And if we don't get that, okay, at the minimum, I would want him to say that from a bigger picture outlook, everything is going their way and we will be getting a rate cut before the fiscal year ends, right? If he does not say that we will be seeing a rate cut in the next few meetings, at the minimum, I would want to hear him say that everything is moving in their favor. Okay, that's all I want to hear. Everything is moving in their favor. Okay, so he kind of said that last time too, but he was a bit shaky with his words, right? He was being very, very careful with what he's saying. I mean, when has he not been careful with his words? Since it is a very sensitive topic when he's discussing rates, inflation, the overall economy. But anyways, it is a pretty hard job for him. I'm not going to be, putting him down with what he does. It's a very important job. But, I just really want him to give us a slight hint that even if it's not most of the Fed Reserve members, I would like to hear him saying that there is a rate cut on the table, whether it be an indirect statement or an actual direct statement. The best outcome for us tomorrow will be a direct statement that the Federal Reserve is going to be giving us one rate cut in the next few FOMC meetings. Okay, but if not, I just want him to provide the market some more confidence, especially for the bond markets, that there will be a rate cut before the year ends, at the minimum, right? Before the year ends. One rate cut before the year ends. All right, that's the minimum of what I want him to say tomorrow, and what I'm going to be personally expecting him to say tomorrow. Does that make sense, guys? Okay. Hey, Adriana, what's up? What's up? Whoa! Do we have 10 likes here, guys? All right. And so for everyone who is watching the recording, or if you guys are not a part of the CFO Stream and Watch report and the private CFO Discord, I've given everyone a bit more details, a lot more details actually, as to what we should be expecting based on the data that we've had previously and the data that we have now. So if you guys want to join, make sure you guys DM me at ChartsFocus1 on Instagram, because, well, you guys will be able to get a 50% off for your first 30 days. And I've been repeating that for the past 2 to 4 live streams. So make sure you guys are paying attention when I do tell you guys that, all right? Because you guys have this opportunity to join for 50% off for your first 30 days, all right? And again, I've told all of my members and readers a bit more specific details as to what we should be looking at and what specific groups and sectors that we should be trading as we head into CPI, okay, and the FOMC rate decision. Okay, I've also broken down a lot of information tonight in the actual private CFO Discord as well. So make sure you guys DM me at ChartsFocus1 on Instagram if you guys are interested. Okay? So that is all up to you and all up to your fingers. If you guys want to message me and DM me on Instagram, again, at ChartsFocus1. All right? So, yeah, I mean, that's pretty much it for what I'm going to be expecting tomorrow. Again, I'm pretty surprised that all the rate-sensitive sectors and groups like, consumer, retail stocks, right, consumer staples, and solar stocks, especially the solar group, reacting so well. And then what really hit the ball out of the ballpark is the bond yield. Right, the bond yield was really just starting to crater, and we've essentially made a nice lower high compared to yesterday's highs. And the overall bond prices, right, TLT, or again, the 20+ year Treasury ETF, or IEI, which is the shorter term 3 to 7 year Treasury bond ETF, they have all made higher lows as we head into the inflation report and the FOMC rate decision. So, again, I mean, this is really all pointing towards a pretty tame reaction to inflation, whether that be an inline reading of the actual May's inflation report data, of 3.4%, or a slight increase of 3.5%. Even if it's an increase of 3.5%, and if it's not in line with expectations, again, I really don't think the market will be reacting too much to the actual report, and it will be dependent more on what Jerome Powell says tomorrow. All right. So make sure you guys are remembering that as we head into tomorrow with the May's CPI report coming out at 8:30 p.m. Eastern, 8:30 a.m. Eastern Standard Time, or for all of us Pacific Standard Time people, 5:30 a.m. Okay, I'm most likely not going to be awake by that time. I'll be awake maybe like 15 minutes after, like 5:30. But yeah, I mean, I truly haven't been really keeping up with CPI the last couple of months, and there really hasn't been a need to, because again, the overall trend for inflation has been to the downside. Okay, and as I've repeatedly stated from all of my previous live streams and videos, especially last week's hump day market recap, I specifically told you guys what those oscillations mean. So make sure you guys watch it. Here, let me even give you guys the actual link to that market recap video in the live chat. Okay, there it is. Okay, so if you guys click on it, you guys will get the last week's hump day market recap video. Okay, right? So make sure you guys watch it, right? Make sure you guys watch it. It's essential that you guys watch it. Okay, if you guys want to leave the live stream now and watch it, go ahead, because it's very, very important what I discuss on that video. So really, like, I'm actually being serious. Click out of this live and watch that video right now. It's very important before you guys go to sleep, and before the market opens tomorrow, and before we have the CPI report before market open. All right, so again, just to summarize everything that I told you guys tonight, inflation should come in line with expectations of 3.4% for the headline CPI, and the core CPI should also come in line with the expectations of 0.3%. So basically, if everything comes in line tomorrow for all the inflation data, we should be unchanged from April's data, because again, the current expectations are the same, the exact same from April's actual headline and core CPI data. All right, and that will be very, very bullish for tomorrow. And Jerome Powell will also address the morning's CPI data for May during his news conference tomorrow. Okay, and I'm pretty sure he'll have a lot of good words to say about that, because yet again, they're all, not just Jerome Powell, but all the Federal Reserve members who are most likely optimistic into next year and even next year for the rate, for the overall benchmark interest rate or the federal funds rate. They will be pretty excited to see that the inflation is still going in their favor, and overall the labor market has been showing some major cracks, and they're very, very tight conditions. So yeah, I mean, that's pretty much it, guys. I really hope you guys are understanding where I'm coming from with what I've just told you guys tonight, and the reasons why I'm a bit bullish heading into tomorrow. Again, everything that I've seen yesterday and today points towards a very, or actually, literally everything that I've been looking at. So small caps, solar stocks, consumer staples, or the overall retail stocks, they've all been reacting very, very positively the past 2.5 weeks. And this all comes as we're heading into tomorrow of CPI report and the FOMC rate decision and Jerome Powell's news conference. Okay, and then lastly, today we had an even better confirmation with the bond markets, right? The bond prices moved up higher while the bond yields moved lower, because again, they have a direct inverse relationship. If you guys didn't know that, right? But you guys should know that by now, because I talk about it all the time. Okay. All right. Well, that is it for tonight, guys. Hopefully you guys are able to truly understand and comprehend what I've discussed tonight. And hopefully you guys are able to prepare well tonight for tomorrow and be able to really manage your trades well and maybe even execute on some new trades depending on how we move tomorrow, whether it be bullish or bearish. Again, it's still a 50-50, a coin flip event tomorrow. I may be wrong. There's a 50% chance that I may be wrong tomorrow and a 50% chance that I'm right tomorrow. Okay, so take all of this with a grain of salt. But again, I have seen all the technical signs that we are probably going to be seeing some very nice bullish reactions tomorrow. That's what I'm saying. That's what I see from a 50% chance perspective. All right. Okay, so that is it for tonight, guys. Thank you guys so much for the likes, the continued support. And yeah, I'll see you guys on Thursday. Okay, at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Good luck tomorrow and have a great rest of your night. Thank you so much for watching.